want to get your initial take on these trade tensions or trade war. Would you call it a trade war?
What we look at is something that has created some uncertainty, and markets, investors do not like uncertainty. But so far, with the strong world economy, it is early to predict where this would take us. What we do know for sure is that trade is good for growth, it is good for jobs, it is good for poverty reduction. So let's hope that we can stay steady on that road we have already successfully traveled.
Yeah, Mr. Georgieva, actually, many agree, including the Chinese, that a lot of these things that we talk about, there are structural issues and imbalances, trade imbalances that have been in place for decades that now need to be solved and revisited. The debate is actually concerns the method at which we are approaching these problems. Help us understand, what would be the World Bank's prescription as to how to solve these problems?
What we always look for is a rational assessment what would work for the economy of any individual country and what would work for the world. And what we have to recognize is that there has been some negative impact of globalization of some parts of national economies, especially in the developed world. And that has created anxiety that feeds into suspicion in whether trade is really good. What we recommend as an institution is to assess what would be the benefits of trade, where the negative impacts come, and especially to concentrate on the second driver of this negative impact, and it is fast technological transformation, and be able to separate those two, paying attention to those who are losers of globalization is absolutely paramount, and we are seeing countries successfully doing exactly that. For example, Denmark coming with flexicurity to provide buffers against shocks caused by both globalization and rapid technological transformation. So our recommendation is focus on understanding where anxiety comes from and solve the problems that are causing this anxiety to turn into a political momentum against trade.
Kristalina, China's efforts and achievements in lifting an unprecedented amount of people out of poverty over the past decade, past 20 years, is very well documented. And President Xi had said he wants to lift another 70 million people out of poverty by 2020. How much does a trade war and an economic downturn potentially impact that? And how damaging is it for other countries, particularly here in Asia, developing countries that are seeking to do the same?
So far, what we see is that the impact of this worry about protectionism on the world economy is relatively modest. In fact, trade has gone up by 4.7% last year, and that is a very welcoming development. We have to be mindful that for China, it has been important to rebalance its economy more towards domestic consumption, and that rebalancing remains a top priority. As far as we can see, the success in moving in that direction has been rather impressive, and let's see how that would continue. But of course, we have to be concerned about perception of reversal of what has been decades of open economy. At the bank, we worry about the impact on investment confidence. Are firms going to start slowing down investments just because they take wait and see attitude? And this is where building more confidence through measures, including through lifting up domestic consumption in China, is so very important.
The question right now, and to your point on uncertainty, is because we have this back and forth between the Chinese and the Americans, many large firms out there are probably rethinking where they need to place their supply chains and perhaps holding back on that capex. What would make the World Bank rethink your forecasts for the year? Are we already close to a point that you need to revise lower your growth forecasts?
You know, we are not yet there, but let me flag two other issues that we have to concentrate on more than we have been doing so far. The first one is debt build-up. What we see is that after a decade of low interest rates, the corporate and public debt in many places has ballooned to a staggering $164 trillion, with interest rates going up. That attention on debt sustainability has to be much stronger. And two, during good times, countries have a chance to carry out structural reforms to position themselves stronger for the future. We don't see many countries taking advantage of this period of strong economic growth to carry forward structural reforms. And our advice to countries is, do not wait. Good times may not last. They usually don't last forever.
Kristalina, are we looking at a reality where, in this part of the world at least, China is the funder when it comes to infrastructure investment through the likes of Belt and Road, through RCEP? And the second part of my question, what's the World Bank doing about it in terms of through IFC? Is there an urgency, and what's in the pipeline in terms of the partnerships with some of these countries to address the infrastructure issue by the World Bank?
Well, China has built up a financial strength, and with more wealth comes more responsibility, not only towards investments domestically, but also towards making that financial capacity available for other countries to grow. This has to be done with great care for the capacity of countries to actually implement large-scale investments. And that is where the World Bank plays a big role, to help them assess, is this a good investment, or we are risking to have a white elephant that would drag our economy? And especially in the context of the problem I talked about, debt sustainability, very important to project investments with good care for the financial health of countries. What we do, and now we can do more of it because of the capital increase that our shareholders have granted us with, is to use our financing as a platform to draw in private sector investment on a scale. Official development assistance, even if it grows, is a tiny part of what the investment needs of developing countries are. Billions versus trillions. And to make sure that we can draw more investment attention to developing countries, we work on the investment climate in these countries, making sure that they are less risky for investors to come. And secondly, using our own projects to be a comfort builder for private investment to flow. We have very massively shifted our programs towards maximizing finance for development from private sources. And you can see many more projects from the World Bank Group, IFC and the World Bank, that are oriented towards blended finance or creating financial vehicles that bring massive capital in the developing world.
You're there in Singapore for the World City Summit. I mean, this migration of people into cities is as old as commerce itself. We haven't gotten that one right. You look at the amount of poverty in a lot of these big cities across Asia. To your point earlier in debt, are we spending enough money to alleviate that problem?
You're putting your finger on a very big problem indeed. We now have 55% of the world's population living in cities. And what we face in many cities is that the number of people living there grows much faster than the infrastructure capabilities, the jobs, the ability of the cities to absorb these people. 1 out of 4 citizens in cities live in slums. 250 million slum dwellers in East Asia, the most dynamic region. So we clearly have to concentrate our attention much more on making cities livable and able to provide jobs for the people there. And what the World Bank now does quite concentrating on is 3 things. 1, direct more investments to multi-sector approach to urban development. In other words, worry about the whole of the city. 2, concentrate on slum upgrade and using new technology to create financial capacity for citizens to have better living conditions. And 3, a lot of attention to jobs and to the social protection of people, of poor people in urban areas.